Hi there, welcome to Income Lab. This is a retirement distribution tool really focusing on clients who are 5 to 10 years out from retirement, as well as those who are already in retirement themselves. Now, typically when it comes to planning platforms, you'll put in goals based off your investment accounts and any sources of income, as well as all the different moving parts in a plan. You'll be prompted with a probability of success and failure. Here at Income Lab, we're getting rid of probabilities and scores just because we don't believe that clients fail in retirement. They have to adjust. Here on this main screen, we're really trying to answer three main questions for clients. It's what can I spend in retirement? What would cause me to change this amount? And what would the sizes of those changes be? Here you'll see I have these clients retiring in May of 2029. And what we do is we're taking all of their retirement resources like investment accounts, any sources of income like pension, maybe you have some Social Security. And what we do is we come up with a spending capacity. You could think of this kind of like a Goldilocks zone between overspending and underspending. Also, you could think about this like your paycheck in retirement. We're letting you know how much you can make or take as far as a monthly basis and exactly where those income sources are coming from. If we open up the spending capacity card, we'll be able to see in, again, May of 2029 when I have these clients retiring, exactly what those sources of income look like Social Security. We have a pension modeled in, some rental income. Then we'll actually calculate those portfolio withdrawals for you based off your distribution method. Right now, I'm just using a pro rata, kind of pulling from all the different account types at once, proportionate to those account sizes. We could also set this up as a taxable, tax deferred, tax free, any of those orders. And then we have this nice feature over here to our left where we could see maybe if we could find some tax efficiency strategy like Roth conversions, really trying to optimize for least amount of taxes paid, highest total net income for the plan itself. Down below, really just explaining at a high level what your gross income is, where portfolio withdrawals are coming from, some other income, some Social Security. We have this nice income goals tab as well. We're really showcasing what Income Lab is projecting out for income versus what maybe a client is looking for when they have monthly expenses. As you can see, we've modeled in about $10,400 for expenses on a monthly basis in retirement. Income Lab is actually proposing that they could be taking $18,500 when it comes to net income. Now, maybe clients don't need this extra $8,100 per month. We could also tell the software, let's just gross up our income to cover expenses and taxes. So there's no surplus, there's no shortfall. But by default, what Income Lab is doing is really looking at those resources and saying, Mr. and Mrs. Client, you have the ability to be taking out this much from your portfolio and using those other sources of income to really enjoy that quality of retirement itself. Now from here, clients may want to know, well, what if we see some down markets? What if the economy starts to take a downturn? What's going to cause me to actually change the spending capacity? This is where Income Lab's income and risk-based guardrails come into play, really setting those expectations up from the start and letting them know that maybe if the portfolio is performing a little bit better than expected and we hit a top guardrail, or in other words, our account balance reaches a top threshold, we have the ability to actually increase their income and give them a pay jump. Whereas vice versa, maybe a little bit more important, is that downside risk. Income Lab is really letting clients know we don't need to worry about changing this spending capacity, especially on the downside, until our portfolio balance reaches, in this case, $2 million. And what we have to do is probably decrease our income a little bit to $18,100 to help keep our plan on track to meet those goals. Now you can always open up these guardrails down below. As you can see, you have your projected balance or your current balance if you're in retirement, a top guardrail and a bottom guardrail. Here on the right side, we'll show your spending capacity and where we could increase or decrease into the future if a guardrail was being hit. And then we have this income setting slider down below, basically giving you a range from conservative to aggressive spending. And what we do is we put you right in the middle. Maybe if clients are a little bit more conservative, don't really look forward to making those adjustments in the future, you'll see these guardrails really widen out. So that chance of adjustment moving forward is a little bit less likely to happen because we're taking out a little bit less risk and a little bit less spending capacity to start off the plan. Vice versa, they're a little bit more aggressive. They don't mind taking on a little bit more risk. you'll see those guardrails above actually tighten up. So now moving forward, the chance of adjustment is a little bit more likely to happen because we are increasing that income early on. Now, what Income Lab will do is we'll take your account balances and we'll monitor those on a monthly basis, essentially letting you know if you are within your guardrails or if a top or bottom guardrail is getting hit, and if we're proposing to make changes to your income, either on the upside or on the downside. Now, we can take this plan and basically run it through some of the worst time periods we've seen economically and get an idea of how it would have performed during the 07-09 period, dot-com bubble, stagflation, post-war decade, Great Depression. So what we're doing is if you scroll down a little bit here, you'll be able to see that we're showing exactly what this income path would have looked like and how those guardrails actually would have reacted. In this case, we're in the global financial crisis, 07-09. And you can see these green dotted lines. This is where Income Lab actually would have proposed an increase to their income because this top guardrail is actually getting hit because of that account balance. Whereas maybe later on in the plan, we're seeing that a bottom guardrail is getting hit and we would have proposed a decrease to your income. Again, you could check this during all the different time periods in the past, like the dot-com bubble, stagflation, really get an idea of how this plan would have performed in the past, maybe get an idea of if we saw a similar time period in the future, how it would have reacted. And typically, we're showing that in most cases, minor, temporary adjustments keep their plan on track to really meet those goals in the future that you have modeled out. A great feature here in the stress test is that you could take two different plans, really run them up against each other and see how they both would have performed during the time periods, see the trade-offs between the two. As you can see, the top here in the blue household plan, this is what Income Lab initially would have proposed. Whereas here in the yellow, this is where maybe we're solving just for their expenses. We're not grossing up income or seeing our max capacity. Really just seeing the trade-offs between the two and when income adjustments were actually being called for. And you may have noticed as well that, well, why are we seeing decreasing income as time goes on? Well, we do have the retirement smile or the go-go, the slow-go, the no-go years, also called the age-based income path, essentially starting income off higher early on in the plan. When clients typically are more healthy, they can go out and do some more traveling. As their health typically deteriorates, we'll see that decreasing, flattening out. This is something you could change within the platform itself. This is just a default setting. To add on, if we ever wanted to take into account inflation, we could always switch this over to nominal and get an idea of what this would look like in future dollars, taking into account inflation as the years go on. Now, I wanted to bring you over to the tax lab as well. This is where Income Lab has taken this plan, essentially running it through all of our different tax strategies, like a pro rata, all of our order by tax treatment options, then a Roth conversion and bracket management strategies, giving you an average tax rate, total taxes paid, total net income, and total net legacy. And what we're doing is we're automatically going to populate in for you with this green star an optimal solution based off least amount paid in total taxes and the highest total net income. But you could always come in here, kind of customize exactly which strategy you want to use. And we're just comparing this to conventional, taxable, tax-deferred, tax-free strategy. As you can see up above here, the two strategies, as well as on each of these cards. And we're really showing the comparison, what you could be saving in your average tax rate, what you could be saving in total taxes from strategy 1 to strategy 2, how this affects your net income, really get an idea of how it affects your net legacy as well. You can really dive in on a year-by-year basis. You can see maybe with the Roth conversions, you have that upfront heavy tax burden that's coming into play here in the blue, whereas in the yellow, the taxable, tax-deferred, tax-free, showing that steadily increasing tax bill, typically due to those RMDs kicking in. I personally like the break-even age here. Sure, maybe clients could be saving hundreds of thousands of dollars over the course of their plan when, say, doing Roth conversions. But if they're not breaking even until they're 100, 105, doesn't make sense for the client. Maybe it does if their goal is for increasing that legacy for tax-free. I'm really just showing the analysis for you as far as cumulative taxes over the course of the plan with the two strategies, essentially where it needs to make it out to where you'll start to really see the benefits of, in this case, doing those conversions versus that more conventional wisdom kind of steadily increasing and becoming more expensive over time. In this case, looks like just about 2048, 2049 is when they're breaking even. Be able to see the ages of both the clients, seeing if it makes sense for them. Again, really just showing the analysis on a year-by-year basis for the clients themselves. Now, we also have this Explore section, which really dives into one specific plan on a year-by-year basis, giving you an analysis when it comes to income, when it comes to taxes, all on one screen. So in this case, we're going to 2029. This is when this client is retiring. And we'll be able to see all different sources of ordinary income here on the left side, its respective tax brackets, long-term capital gains income here on the right, as well as some estimated actions for the year, like withdrawals from taxable accounts. We have some withdrawals from tax deferred. And in this case, we're actually making those additions into those tax-free. And we do have tables on all of our modules, really break this out on a year-by-year basis. They could all be put into reports and modules to send over to your clients. For taxes, we're taking into account federal, state, local tax, which you could add in as well. And then that extra IRMA premium if it's ever kicking in. Finally, we have this great feature called LifeHub. This is really your one-page financial picture. It's all interactive, so you can break this out as little or as much as you like. We do have some preset visuals up on the top here, really just breaking out everything when it comes to income, expenses, you have your taxes down below, assets and liabilities. Great screen to really start those client conversations, really showing everything that's happening financially within a plan itself. And like I mentioned, it's all interactive. Maybe you want to make some changes to Social Security. We have this great tool. You're able to defer. Maybe it's till 70. You'll be able to see a benefit amount as well as the break-even age. Or if they're taken at full retirement, you can make those changes on the fly if you ever wanted to. And a great feature is that we have a nice timeline. Again, really just showing all the important events that are occurring financially within a plan itself. Retirement starting, we have pensions and Social Security starting for Sarah. You can navigate to that year. Retirement for Mike. Maybe they're traveling for a few years. Social Security. Home is getting paid off. Really navigate to any of those years and just see how cash flows are flowing throughout the plan itself. Even when RMDs are kicking in, or if we're having a sale of a property in the future. Now, like I mentioned before, Income Lab is really coming up with that spending capacity for you. As you can see, recommending about $276,000 worth of income. That's coming from portfolio withdrawals, pension, rental, some Social Security. Well, maybe we could tell the software as well, I just want you to gross up my income to cover my expenses and taxes, as you can see here. Income is equal to expenses, just grossing up enough just for their needs. And then during those time periods where extra income is coming into the plan, like RMDs, we'll actually reinvest those withdrawals right back into the portfolio, really letting those accounts accumulate over time. We have another great feature on here called FinFlow, really just showing you all the flows of income from the left side. You have income here, portfolio, other income, Social Security. On the right side of all your expenses, we have some baseline living expenses, some Medicare premiums we'll calculate for you, some other variable, and those taxes as well. Again, if Income Lab is actually proposing this amount for you, you'll be able to see that extra surplus that's coming in. Is it too much? Maybe it's not enough. What Income Lab is essentially showing is what we're proposing for your income, what those sources are coming from, versus what you've modeled in for expenses, and basically letting you know if there's any leftover that could be spent for the year. We'll also show this for assets and liabilities. All of your assets here on the left side, your net worth, and those liabilities getting drawn down on a year-by-year basis. Same thing with portfolio flows. Maybe we have some RMDs kicking in. You can see exactly which amount that's coming from, which account, and where it's headed to. In this case, spending. Now, another great feature here in LifeHub is that you can create nice, simple 1 to 2 page reports for your clients. I know a lot of advisors are trying to get rid of those 50-page reports with the big binders. So Income Lab took that into account. And what you could do is basically take a screen grab of whatever you're showing on the screen and at any given year, and we'll create a nice 1 to 2 page report for you here. You can put your own logo, your own disclosure language on, and now you can see nice simple one pager you can send over to your clients any given year, retirement or in pre-retirement. If you have any questions at all, feel free to reach out to our team. More than happy to give you a live demo, answer any questions, technical. Feel free to reach out. We're more than happy to help you out. Thanks.